Okay, we are live. I'm Anton Stetner. We are going to go through the Seattle Metro together. We are going to look at King County, Snohomish County. We're going to look at home prices, average price, days on market. And as usual, this is for you. So if you have questions about a specific market, if you have questions about what we are seeing in the data, just drop that right into the chat as we go. Happy to answer your questions and come back through and look at either a specific property, a zip code, a neighborhood, whatever it may be. And why should you be listening? You should be listening because I've been looking at this specific data since 2003. I've sold thousands of homes here in the Seattle Metro. We do brokerages, we do real estate investing, we do land development stuff. And I'm just a nerd who happens to really like numbers. So I'm going to share that with you this morning. So let's go add this to the screen. Right now, we're looking at King County, and this is the median price for King County. What's interesting is you can see it basically had peaked in May of 2022, right before we raised all of these interest rates. And then we hit 880,000, then 900, then 905. So a lot of this market has been showing to us and been demonstrating to us that it does not like these higher rates that we've been experiencing. So I want to talk about the higher rates for a second. I want to go through what we're seeing in the rates. And we'll start by looking at the 10-year Treasury. So the 10-year Treasury is really what sets all debt. This is what sets credit card debt, auto debt, student loan debt, all of that jazz. And right now, you can basically take this number and add about 2.5 to it, and that's really what gets you today's interest rate. So let's call this 4.3, add 2.5, like you may be paying around, 6.8, somewhere between 6.6 to 6.8 is probably what the average consumer is paying today. Well, this just came down. Why did the 10-year Treasury, have this drop right here? That drop was really from the bad jobs data that came out on Friday. Tony Blodgett and I just recorded a podcast in relation to that, where we talk about why the Fed's going to have to cut interest rates. You can watch that over on the YouTube channel. But the moral of the story is those negative revisions is we only made 73,000 jobs when we were expected to make like 110,000. And then we had a negative 258,000 revision to the downside. That's 250,000 jobs that we didn't make. So it's no wonder the 10-year Treasury responded negatively, and then we saw rates drop. And we saw rates drop basically from, about 6.75, 6.8 to about 6.6, where they're sitting at today. What also happened is you can look at the 2-year, 10-year spread. And when this number gets to 50 right here, that means the economy is in some type of shock territory. So we're in shock territory right now. You want this to be below 50 when you're looking at this as an economic indicator. So the Federal Reserve did not raise interest rates, did not lower interest rates at their last meeting. They voted not to cut. But now that this new jobs data has come out, one of the things that we're seeing is the odds of a rate cut went up. You can look at what's called the CME Fed Watch tool. Let's throw this up on the screen. The CME Fed Watch tool is a predictor of rate cuts. And you can see right now for the September meeting, there's a 91.4% chance of essentially a 1/4 point rate cut at that meeting. When you go and you look at October, October has a 58.65% chance of a rate cut. And even in December today, we have almost a 48% chance, almost a 50% chance of a rate cut in December. This means that the Federal Reserve has started changing their tune, and you've seen a whole bunch of people from the Federal Reserve in the last few days come on and say, hey, it's time to cut. So not only did we have two dissenters at the last meeting, you're now getting almost a mutiny getting ready to start inside the Federal Reserve, where the dissenters are becoming more vocal about the need to cut because of the slowing job market. What's that mean for us in real estate? When they cut, they're cutting the short end of the curve, but generally speaking, the 10-year ends up following in that same direction. If they cut 50 basis points, it could mean that rates today would literally be in the low sixes by the end of the year. You get a little bit of margin compression. That's the difference between the 10-year and what the lender charges you. And all of a sudden, by spring of next year, you could be in the upper fives, the 5.75, which at that point, our Seattle Metro really starts to light on fire. In the data, you can clearly see as rates get above 6.5, the market cools down. And as they start to get closer to 6, the market heats up. And there's definitely a psychological barrier when it's just below 6. So like if it's 5.99, that's different than 6 from a buyer traffic perspective, from a number of offers perspective, from the bidding war perspective, things like that. So I'm going to now basically just dig back into the data. Oh, I wanted to show you just a couple more things. Let's look at the odds of a recession. So it's also very interesting. So Polymarket is essentially a gigantic betting market. You can see there's almost $9 million in bets on this. Is there a U.S. recession? Earlier in the year, this is around Liberation Day, around those tariffs. All of a sudden, there's a 60% chance. Now we're all the way down to a 13% chance. So markets are starting to bet that we're figuring tariffs out, that we're getting through this recession talk. And one of the things that's coming next is you had Fed President Kluger basically is resigning early. So that's going to give the Trump administration the opportunity to nominate someone. And of course, Jerome Powell's term ends in May of 2026. And when his term ends, then President Trump gets the ability to elect a new Fed chairman. And so who will he elect as a Fed chairman? Let's look at Polymarket again. I just like these betting markets. They seem to do really well. They were spot on during the political elections. So we got about $3 million that's bet on who will announce who Trump's going to put out. And Chris Waller right now is in the lead with a 35% chance. So according to Polymarket, he seems like the most likely candidate. All right, let's dig back into this data. And as we dig into our local market data, now that we've kind of looked at it from a macro level, know that I'm happy to answer your questions in regards to this. I'm happy to have these discussions. So right before rates were raised by the Federal Reserve, we were basically an average sales price in King County of about 1.1 million. In 2024, we got to 1.14. This year, we got to 1.17, and then, started to come back down a little bit. What's very interesting is that average price is down 3% month over month. I want to flip over to this one and look at this data right here. So this is a way to look at the same data year to date. So the median price year to date is up in King County just slightly at 2.9. And the average price is basically flat at 0.9. When you understand when you see data like this and you adjust for inflation, what this is essentially telling you is that there's almost no price growth when you adjust for inflation. So if inflation is, 2.5%, that means that your median sales price is basically flat and your average sales price was even slightly down when adjusted for inflation. Let's go look at new listings. New listings has been rising. King County is up 19% versus where they were last year. Let's look at homes for sale. Homes for sale is dramatically up at 43.6% over where they were last year in July. That's 44%. Now, the thing to understand is the doomers and the gloomers are going to say that this rising inventory is the crashing market. It's not. That is intellectually dishonest. That's also having PTSD in relation to the great financial crisis. I got a little bit of that too, so I really get it, you know. But where does this stack up relative to history? That's what we have to look at. Yes, it's risen. Yes, it's risen very significantly, but let's look at it over time. Well, we had about the same amount of inventory in 2019 in King County, and that was definitely below its 2017 was below, 2016 was below, 15 was below, and 14 was above that. So this is inventory getting higher. But the thing I really want you to be thinking about is, even though this inventory is growing, what happens the second rates come down? So the CME FedWatch tool says the Federal Reserve is going to give us at least 2 rate cuts this year, which they also predicted. And magically, this happens to be around the same time they gave us rate cuts last year. So if we get 50 basis points or 0.5%, and all of a sudden the market's in the low sixes, what do you think is going to happen? Do you think we're going to have more buyers? Do you think we're going to have more activity? I will tell you, in 2024, at the end of the year, November, December, and the beginning of January, we had an absolute banging finish to the year personally, and we were able to do a ton of transactions. So to be honest, I actually expect that to happen again this year. All right, let's bring this back into 3 years. And I like looking at this data on a monthly basis. You can take these prices and turn them into a rolling 12. The rolling 12 smooths the data out, which then gets us more looking like the year-to-date numbers that we were talking about. Shows King County up 2.8% on the average and 2.4 on the median. Just wanted to show you a different way of looking at that data. I like the monthly though because it's more raw. Pending sales up just slightly. So interesting. Inventory is rising, but we're also got a few more homes pending, or 8.2%. Closed sales down slightly at 1.5, but these pending should come through and start to close that gap. Days on market is up to 28. So the thing to be thinking about with the days on market here is the days on market rising to 28 is more of a normal market. And see, if we go and look at this over max, so see how this is more normal during the mid, 2015, 2016, 2017, 2018, 2019. And then it got exasperated here when the money was really, really cheap. What happens though with these, I got to drop it back to 3. With days on market rising like this, is the inexperienced agent, what they say is the market is slowing down. Well, the market is slowing down, but it's more returning to normal. And it's normal to take a month to sell a home. It's not normal for every home to be selling in days, in minutes, and to have bidding wars on everything. I really do agree with you, Molly. Like, if rates come down, we're going to see a feeding frenzy. And I believe that this spring, because I do believe rates will be slightly lower by the spring, that's going to eat some of this additional inventory we're seeing in the market. And as it eats that inventory, that feeding frenzy is going to happen. So expect bidding wars again this spring. So if we've got buyers that are like barely qualifying today, or they got to get closing costs, or they need special time frames, we've got to get them into the properties today. My investors also hear what I'm saying. Deal season is for the latter part of this year, and then all of these amazing deals that we've been picking up may be running away from us. There's always deals, but there will just be less deals. We've been getting some of the best deals: owner financing, multiple terms, subject to permit, everything that you can think of over the last few months, and you should be too. If you're not, we need to have a conversation about how you're hunting. Let's go look at months of supply. So the months of supply, very interesting, is sitting at 3.7 months of supply in King County. Now, understand, because the market was so hot, that it was such a feeding frenzy, like Molly was talking about, that 3.7 feels very slow. This is still a seller's market, but this is a cooling seller's market heading towards a buyer's market. And then also understand that, generally speaking, when we're looking at this data, this supply peaks right about now. So you can see in 2023, it peaked in September. You can see it peaked in 2024, also in September. And we've been sitting at 3.7 here in June and July. So we may be in the process of peaking already this year. Let's look at percent of original list price. Percent of original list price can be thought of as the bidding wars for a property. So King County is at 99% right now. A good way to think about that 99% is if the property was on the market for $100,000, the data shows that right now it's selling for $99,000. Understand that 98% is about the typical normal average for the area. So when it's above 98, it means there are still bidding wars happening on the right properties. It could also mean, though, that there are properties where the that are overpriced, and they're then having to do price reductions in order to get their property to properly sell in today's market. All right, let's bring the data back up. Throw it back up on the stage. Oh, you know what? I did that one wrong. I apologize. I did percent of list price, which is the last list price. This data right here is the one we like even more. So I apologize. Actually, accidentally threw the wrong one up. This is the percent of original list price. So what was the property originally put on the market as, and then what did it sell as relative to that price? And you can see it's 97.4. Clearly a cooling market, clearly buying opportunities. Understand that the best time to buy is always literally the latter part of the year and in December. So you can see right here in January of 2023, 94.3%. You can see in December, 96.4%. And then we had just low 97s here in December and January of this year. And that's not surprising that winter's the best time to buy in Washington. I mean, come on. It's raining. It's nasty. It's gross outside. If the seller's still on the market, they're motivated. Let's look at the average price per square foot. Average price per square foot going down, trending, similar to prices, but $538 a square foot. One of the things I like to do to hunt for deals is you can basically look at any large data set inside the MLS. So look at a city, for example. You can resort by days on market and then resort by price per square foot. If you have a low price per square foot and high days on market, those might be deals that you might want to make some offers on, because the market's showing you how they could be a good buy in today's market. All right, let's look at shows to pending. So the average property took 12 showings to go pending, but the average listing only took in 4.5 showings in King County. Understand that specifically what this is telling you is if you didn't receive, your 12 showings and you are priced well, positioned well inside the market and marketed correctly, then it is absolutely price that is your issue. All right, let's go look at Snohomish County together. And as always, if you guys have a specific question about a specific city or a zip code, I'm happy to dig into that. Just drop that into the chat, whether you're on Facebook or on YouTube, and I will get around to answering those questions. And my mom's trying to call me. Hi, Mom. Okay. Throw this back up on the stage. Let's go over to sales price. The median sales price. We peaked basically at 775 in April of 2022, right before the Federal Reserve raised. Oh, and we got to 780 in May. So we did finally in Snohomish County pass the previous peak pricing in the median, showing slightly down. This is that cooling that we've all been feeling in the market showing up right there. You're seeing a little bit of that same cooling in the average price in May of 2022, basically 848,000 and 840. Average price did not quite get there. Let's look at this on our rolling 12. So rolling 12 still shows us up 5.8. Once again, this is smoothing out the data, and 5.3%. So ask yourself a question here. Why is Snohomish County appreciating more than King County? And the answer most likely is affordability. As markets are more affordable, they are most likely to appreciate more. And it's just a simple function. Think of it. Buyers that qualify, inside the bell curve, they qualify for the median price and below. Well, the cheaper that is, the more buyers that qualify. So what's happening is King County is hitting an affordability threshold right there at the top. All right, let's look at new listings real quick. New listings up 21.5%. Number of homes for sale up 42%, very similar to King County. Pending sales up 10%, slightly better than King County. Closed sales down 2.9%, but these pending should come up and kind of wash that together. Days on market, 28, exactly the same as King County. And once again, my real estate people, I want you to be thinking when you're looking at this, it's going to take a month to sell the home. Also, with pricing being soft, we cannot price ahead of the market. You must price at or even below, because some of this data is showing you how the spring comps, you can't sell for that price today. That's what this data is showing you. So you need to be very tight and strategic in regards to your investing. A good example is I have a detached accessory dwelling unit that we built there in Everett. In the spring, I probably could have sold that property for $575,000. That property just went under contract at $535,000 because we didn't sell it in the spring and the market has been showing signs of cooling. That's why we're going to get the rate cuts. Real estate's been cooling. The job market's been cooling. The odds of the recession are down, but we still have issues because of tariffs, because of geopolitical uncertainty. Corey, we will get to Burlington, and John, I will get to Skagit for you, sir, after I am done with this one. Oh, before we do this, I want to look at the year-to-date prices. So year-to-date average price, 1.9 in the median. And the average price up 3.5, closed sales down lightly, new listings up lightly year to date. So year to date is comparing all the months together. The other data I'm showing you is month to month. All right, let's flip back over to the MLS. Percent of original list price. Let's make sure we do this the right one. 97.6. That's the weakness in the market that I've been chatting with you about. That's the weakness showing up right there inside of the market, it's clearly demonstrating to us that we're not having as many bidding wars as we want or as we like, and we're not the market is slowing down. Now, mark my words though, once they lower rates, the market will speed up, and expect a very, very busy spring. Let's go to price per square foot, $417 a square foot. Shows to pending 10, shows per listing 4.2. The same thing applies here. If you're only getting 4 and 5 showings, and you are in good condition and you are marketed correctly, it is then going to be the price. All right, John wants to look at Skagit. Let's throw this up here and look at Skagit County, sir. Add back to the stage. Let's go to Skagit County. Skagit County. I got to hide you so we can see all the data. Sales price. Oh, look at Skagit. Median sales price up $592,000, above 2024, above the peak in April 2022, and up 11.7% versus last year. Wow. The average price, so that was the median. Median, of course, is the middle. Median is less affected by crazy things in the data because it sits in the middle. The average has the ability to be more affected. Always remember that. Average price in July of 2025 was $629,000, basically up 7.7% versus the same time last year. Let's look at it on the rolling 12. The rolling 12 shows up 5.3% on the average and 5.7% on the median. So this is just another good example of Skagit County being slightly more affordable than Snohomish County, and then definitely more affordable than King County. So Skagit County has been out appreciating Snohomish County and King County, because even with the higher rates, your dollar simply went further. Super interesting. Actually, really glad we looked at this. This is also something to be thinking about, as an investor. You want to be going to where the market is hot and where the opportunities are. New listings up 10.5%. That's on the rolling 12. Let's get back into that raw data. So up 15% month over month. Homes for sale, big jump there too. Not as big as King County, not as big as Snohomish County, but up 28.3%. Pending sales down 14, so also slowing. Definitely slowing more than Snohomish and King County. Closed sales down 8.4. Yes, so both the pendings and the closed sales. So it's getting, even though it's appreciating because of affordability, there are less transactions happening, and there are less transactions pending, currently waiting to close in Skagit County. And that makes sense. The center of our real estate universe is basically like Seattle and Bellevue, and every ring out from that, the market generally slows down in relation to the center of our universe. Days on market, 34 days on market. Months of supply of pending, 4.8. Whoa, 4.8. That's basically hitting a neutral market. That means there are buyer deals in Skagit County right now. That absolutely means there are buyer deals up there. I didn't expect the inventory to be that high. Okay, let's look at the percent of original list price, 96.6. So, once again, with that long-term average being 98, in July it was 96.6. That means some of the buyers are getting, I had to take a little drink of water, are getting some good deals in the market. The average price per square foot up $378 a square foot. Shows to pending 9. Average property only getting 3 showings. Once again, Skagit County kind of showing you how it's a little bit more rural, how it's just a little bit slower than the rest of them. Anyone else, feel free to drop in your comments or your questions, and I will look at the market. Corey, let's go look at Burlington for you. Let's dig into that city. Burlington. I'm going to hide your comment so we can just look at the data. Let's go to sales price. Woo! Burlington definitely slowing down. Look at that. I mean, just dropping right there. The median sales price in July of 2025, 437,500, down 17.5% from the previous July. Average 501, down 18%. Man, we got to smooth out this data and see if it tells us a different story. Well, it does show the average peaking in February at 624 and then coming down to 572. Wow, so almost no growth. And the median up 1.5. So yes, almost no growth. So here's what I would say just immediately looking at this is that Burlington, because it's a little further out too, is showing us that you need to really be priced correctly in order to obtain a sale, and that the market is showing signs of softening with definitely two peaks here in the pricing, that peak, and then of course when we flip over to the average, that peak, and then it cooling very significantly after that. New listings down, that's actually good. Homes for sale. Oh, we're on rolling 12. I want to get back to the monthly. Give me my raw data. About where it was last year. So what's interesting too, one thing I should also make clear, there's not a ton of listings. So when we're looking at a smaller city like this, because there's not hundreds or thousands of sales, the data can be highly affected by whatever's happening because there's so few sales. So one of the things you literally may be seeing in Burlington is some of the more expensive properties just said, nah, we're not selling. We're going to keep them, withdrew their listings from the market, and some of the sellers who had to sell maybe stayed on the market, which then pulled these pricing down. That could totally happen too. Let's look at the pending sales, down 21%. Let's smooth that data, see if it gives us a better, down 1.3. So down just slightly, but definitely less than what it was in 2022. I mean, just look at that, just drop as the interest rates went up. Closed sales up 3.2 on the 12 month and up 23, but it's, once again, there was only 16 of them. So, very raw data. Average days on market, 43. So that's another thing to consider is it takes about a month and a half to sell a property. So you're going to have to price aggressive in Burlington in order to obtain a sale in a reasonable time frame and maximize the sale, because this market is trending in a downward direction. Month supply of pending, there's 3.4. which, you're still in a seller's market, but starting to move towards that buyer market. The percent of original list price, not that bad. Better in the other areas, 97.9. So basically almost right on average at 98. Price per square foot, 311. The average property got 7 showings to go pending, and the average property only got 2 showings. Kind of crazy. Yes, Molly, we'll definitely look at that. You want to look at the Edmonds market and the South County. So let's go like this. Let's look at Edmonds first. Got to remember how to spell Edmonds. There we go. Edmonds. And throw this up on the screen. Come over here and grab my sales prices. Gonna hide your comment real quick. Median sales price, flat, $935. Looks like it peaked in April, which is definitely above where it was before, so we like that. A lot of places have been struggling to punch through the high of 2022. Let's look at the average. The high was August of last year, but remember, average can be even more affected than the median. So this could have been just one of those big, beautiful, expensive, waterfront homes or home with a view or in the bowl or something of that nature selling that caused this kind of spike right here. But basically, 1.07 up 4.4. Let's look at it on a rolling 12. Woo-wee, rolling 12, 9.9%, 8.5%. I'll tell you, Edmonds is definitely outperforming most of Snohomish County in that aspect right now. What's also interesting, and this is why you got to dig into the zip code or the area that you're looking at specifically, is the county is showing flat, but Edmonds is showing good appreciation. Why? Edmonds is highly desirable. There's not that many homes that sell there. Everything's easy to get to. Let's look at new listings. Let's go back to the raw data on the monthly. 92 last month, in line with where they were in the last year. Homes for sale up 30%. So definitely more homes for sale. Pending's up 14%. Close up 5%. Yeah. Edmonds is totally outperforming everyone. Days on market, 20. Okay. Yeah. Faster days on market. Month supply of close, 2.1. Okay. Edmonds is clearly outperforming the rest of Snohomish County. It's hot, hot, hot relative to the rest of Snohomish County. Let's look at your percent of original list price, 98.6, above that kind of 98 threshold. That means we're probably still seeing bidding wars there. Price per square foot, $518. Whoo! So expensive in Edmonds. Average property getting 12 showings to get an offer accepted and go pending. The average property getting 5 showings per listing. Let's go in and look at trying to remember how to do. Oh, there we go. Okay. So let's move this around and let's just kind of look. There's shoreline. So let's clip out shoreline. And let's kind of polygon this. So I'm going to sit for South County. I'm just going to kind of go like this. I'm going to give us part of Painfield. Now give me the polygon. Part of Painfield. Let's go all the way over here into Cathcart. Come on, click on it. There we go. Let's grab this top of Bothell and Briar. Boom, and connect that. There we go. Okay. So this is our local area to define. Create new area. South Snow Co. Save. We're saving the area. Come on, MLS, do your thing. Let me do this. It's always hard when you're doing this live. It's like, okay, is it actually going to work? Okay, so now we've got that area up. Now show me the data. Go to my areas. Go to South. Oh my goodness, that worked. Molly, I didn't. I wasn't sure if I was going to be able to pull that one off. Yes. That's awesome. Okay, so average. Let's look at our sales prices first. So we got our monthly. And Tommy, I do see you. We'll go hit Bellevue after we're done looking at South Snohomish County here for Molly. So median. So we haven't got back to our peak. That's something to really pay attention to. March and April 2022, 950. It looks like we hit 925 in May in 2024. And this year we only peaked at 897. Let's look at the average. Average 933, down just slightly. Let's smooth this data out, see if it gives us a better picture. Yeah, this is kind of what I expected. South Snohomish County is really showing us about 3.1% on the average at 930. The median showing us 855. Once again, it's struggling. And this is really that function of affordability. This is really that function of interest rates. Mark my words, I've looked at this data long enough. As soon as the Fed starts cutting, this softness will go away. It will go away quickly. Expect it to be the frenzy like we had talked about before in the spring. Okay, let's look at new listings. Let's unsmooth it. Let's look at the raw data. I like the raw data. Up 15%, versus 2024. Homes for sale. Oh, wow. 51%. So a lot of that inventory is really stacking up in South County. And this is most likely due to just sheer prices and affordability. Wow, I didn't expect that to be 51%. Pending sales only up 3.7. Closed sales up 4.4. Days on market 21. Okay, doing pretty good. Let's go to the month supply of closed. Oh, 2.5. Interesting. Homes for sale up 51%, but inventory, yes, it did rise, but I guess it rose in line because it did rise 44%, but it was so much lower before at 1.8. So South County, I'm going to say, is still pretty hot. Let's look at our percent of original list price. 98, in line. Interesting. So I'm going to retract part of my statement there. I'm going to say, yes, it is cooling, but it wasn't cooling as much as I had thought. I would say this is more the market returning to more normal and healthy. I would say that expect pockets to be soft, though, in certain areas, and certain things to be soft on pricing. Let's look at our price per square foot. $457, down 2.4%. The average property got 11 showings to accept an offer, and the average property only got 4.7 showings. I wish the MLS showed us price reduction data. It's because it's really interesting. Let's look and see if where do I have this set? I have it set on Snohomish County. Perfect. Because this is always really telling. When you look at something on the 7-day time frame, you can see there was 319 new listings that came in, but there was 328 that reduced their price. So about the amount that came on the market sold, but that's a lot of price reductions. I will tell you that number has been very high and growing, and I wish the MLS specifically graphed out that piece of data because I think it would be really telling. I also wish they showed us this data daily and weekly instead of making us wait every month. P.S. Petition the MLS so that they will do that. All right, Tommy, let's go look at Bellevue at the 98005. Oh, come on. I got to click the little zip code. Boom. Let's rock and roll. Okay, throw this up on the screen. Hide your comment. Wow. 98005 Bellevue. 1.665, up 27% versus last year when you look at the median, up 58%. And so this just goes to show you there are parts of the market that there's so much money in that specific area that you're seeing rapid appreciation while King County as a whole is not appreciating. This is why when we're doing our stuff for our investors, when we're doing our stuff for our builders, our developers, our home sellers, you got to dig into the data specifically. Everyone likes to look at a top level. You got to go a few layers deep to figure out what's actually happening in that area. Amazing. New listings. 37, 85%. Homes for sale, up 256%. So way more homes for sale than normal. Let's look at this over a longer time period to see what this data looks like. Oh, wow, that's really high. I mean, we're talking, man, that's above 2012. That's above 2018. Wow. Okay. This is a lot of homes for sale in the 98005. Oh, there's not usually that many for sale. Really interesting. Wonder what's happening there. Okay. Pending sales, down 40%. There was only 12 last month. Month supply of closing. Oh, here's why. 5.4 months. So even though prices are appreciating in the 98005, what you're seeing is it start to get ready to enter a buyer's market. It's starting to hit neutral at 5.4 months. Now, the difference, though, the thing I need you to take into consideration is a lot of the upper end, the more expensive homes, they don't have to sell. So sometimes they're on at wish pricing or I want to sell. This is not, generally speaking, the distressed home seller. So they don't have to do price reduction after price reduction. They can just sit there and wait. And the spring market, if it heats up, it may catch a bunch of these sellers, and all they have to do is wait. And they'll probably end up canceling for the winter. The average property, 96.9. So it is some softness. So look, bidding wars in March. Bidding wars, matter of fact, bidding wars, January, February, March, April, May, probably back to normal in June, and then some slight discounts last month in July. So some of the people that were left were slightly motivated last month. Let's look at price per square foot. The average, holy Toledo, $737 a square foot, up 14%. The average property taking 19 showings to accept an offer. The average property only receiving 5. One of the things to be thinking about there is that is really a lot of showings, but it shows you the level of clientele that's looking at this. They're more discerning than the average buyer. They're going to go look at more homes. They have more upward price mobility, so they can move around. They may be looking in this part of Bellevue or in other parts of Bellevue or Kirkland. This buyer is very, very mobile. Is there other places that you guys want me to take a look at, while we're doing this? And one thing I was going to look at, because a builder was chatting with me about this, and I think I'm actually going to do a deep dive into this data, not necessarily right now, but I'm going to do it later, is I was going to look at just the new construction in Snohomish County, because I was talking with Mike Appleby over there at Chicago Title, who is the GOAT of new construction in Snohomish County. And a lot of people have been really sitting on their new construction. Not as many offers, myself included, weren't getting it. So let's look at Snohomish County. Let's look at new construction specifically. Let's just take a quick dive at this. Median down 9.2, average down up 2.8. Let's smooth this data out. Up 6.1 on the average, and median. See, this is where I think the median's telling the real story here. Flat and slightly down, peaking in February. This is what everyone's been feeling in the new construction space. There are some deals in the new construction space that you should be looking for buy downs. They've got standing inventory, closing costs, things like that. That's what this data is telling you. New listings, really about the same. Homes for sale, a little bit less than the overall market, up 37%. Pendings down 4%. Closed sales, ooh, that's what I'm talking about. Closed sales down 10%, new construction in Snohomish County. Days on market, 37. Month supply of pending, 2.6. Slightly better than the than Snohomish County as a whole. Percent of original list price, 98.4. They're sticking to their guns. They're definitely sticking to their guns. But they're probably giving it to people in buy downs and closing costs. Price per square foot, $418. Shows to pending 5, 2.3, but this is not necessarily an accurate number. One thing I'm going to do with this data for one of our developers is I'm actually going to go in, I'm going to extract it all, and then I'm going to go look for larger trends on what's selling, what hasn't been selling. Are our units getting smaller? Where should we be putting our money for 2026? John, coming to you next, and I will get you right after John. My main man John wants to go look in Cedro. Let's look in Cedro specifically. Oh, I got to click the city button. Cedro Woolley. Add to stage. Hide John's comment. Sales price. The median was basically 556, down 4.6. The average, wow, interesting. Same number. Yeah. Okay, let's smooth the data out and see if it tells us a different story. Up 9.3% on the average. Up 13%. Really interesting. Huh. Cedro is trending still in an upward direction. John, I'm going to say that's probably affordability. Hopefully, brother man, you've got a cool flip or something you're looking at buying there. I'd tell you, well, hold on. Let's look through the rest of the data and then I'll make my little thoughts here. Here's what's funny about Cedro. It's a small area, so you got 2 listings. The data's not really good there. Homes for sale, you got 9. Pending, down just a little bit. Let's smooth this data because it's going to get us a little bit. So pending's down 22%. Homes for sale down 23%. New listings down 36%. Not much for sale out there. That's good. Okay, but closed sales down 16. Days on market, let's drop it back to quick. 11 days. Real quick. Wow. Real quick. Month supply of pending, 3.9. You know, so moving towards that buyer's market. Let's smooth this data out and take a look at it a different way. Yeah, 3.5. Okay. Percent of original list price. Whoa. 101.8. We got bidding wars. We got bidding wars going on in Cedro. I mean, if it's priced correctly, it's selling and possibly having a bidding war. That's cool. Price per square foot, 360. Shows to get pending, 1. Average property, 3. There's just not much for sale there. So there's not much for sale there. There's not much data. John, if you're looking at doing a flip there, or you got one that's coming on the market like you're usually doing, I'd feel very comfortable. I'd feel very comfortable acquiring another property there or building a property. This is good data. This market should gobble up inventory that's positioned and priced correctly. I feel very comfortable with that. All right. Do you think Linwood Bothell area will have price drops? Well, let's throw up both Linwood and Bothell. Let's run them both simultaneously right next to each other. And let's look at what the data says and see what we can figure out. So number one, I don't expect significant price drops really anywhere in our area. That is not in the data at all. And then also understand that as rates come down, and just to go back to the CME Fed Watch tool, I mean, they're predicting a 92% chance of a rate cut by the Federal Reserve of 25 basis points. And then, you know, almost a 60% of another 25. So if we come over here to this 10-year treasury and you go today, you're at 4.25. Well, that'd take the 10-year treasury to 3.75, which, you know, then we go 3.75 plus 2.5. Rates are going to be somewhere between 6 to 6.25. That really, you know, kind of speeds our market up. But let's dig into the data specifically. Let's let the data speak for itself. Oh, I got to hide your comment. Okay, hiding that comment. Sales. Okay, median price. Linwood is 702. Bothell is basically 1.04. Linwood down slightly. Bothell up slightly. Average price Linwood down slightly at 758, and Bothell at basically 1,070,000. Let's smooth this data though and see where the trend is heading, because I like looking at this from a trend perspective. Linwood down slightly. I mean, you can see it right there, peaking in June of 2024 and down slightly, 2.5%. And Bothell also down slightly, 3%. So you are seeing some softening of that market right now. Generally speaking, so if we look at this over a longer time period, generally speaking, this kind of softness happens later in the year, though. And stupid, the debt's too cheap there. Let's look at so when we look at it on a monthly basis, so watch this. So you're at 2015, you can see it softens in the winter, picks back up, softens in the winter, picks up, softens in the winter. So we're heading into that time of the year where the natural price softening starts to happen anyway. And that's always something to be thinking about. The best deals, and I'll show you right here in the percent of original list price. The best deals always happen right there at the end of the year. So look at that. 2022, the average buyer was getting, roughly 5% off and roughly, 6% off in Bothell in November. Same here. So October, November, December, and even the beginning of January of 23, 24, it was September. Okay. And a little bit of January and a little bit of December. So the winter is generally the best time to buy a property in our area. It's because the sellers that are still on the market are motivated. It's gross outside. And so you're going to get the best deal at that time. That's when us as hardcore investors, every third and fourth quarter, I'm like on a hunt-a-thon trying to stack up deals for the following year. And I recommend, whether you're a home buyer or investor, to just, follow that lead, do the exact same thing. Okay, Linwood and Bothell were new listings, up 33% and 16%. Let's smooth the data. Showing a very similar trend, up 19% and 20%. Homes for sale, way higher in Bothell and also way higher in Linwood. So there is rising inventory. That rising inventory does create buying opportunities, because with that much inventory coming through, there will be specific or certain properties that you will be able to get a good deal on because there's more inventory on the market than normal and still rising. Pending sales. Bothell's up 9%. Linwood's up 9%. Bothell's down just a little bit at 14. Let's smooth the data, see if it shows us anything different. Linwood up 13%. Bothell basically flat. Closed sales, selling more in Linwood and about the same in Bothell. Days on market, 26 and 22, rising, but still relatively fast. When you're below 30 days, still relatively fast. 1.9 months and 1.8 months. Let's look at it on the monthly. 2.9 and 3. So still a seller's market, even with that much inventory rising. We already talked about the percent of original list price. Price per square foot, 435 and 474 respectively. Average property getting 9 showings to get an offer in Linwood, 13 in Bothell, and both of them receiving about 5 showings. And hey, thank you. Always happy to share this data. Is there anything else that anyone else wanted to take a quick look at before I run away? And while I'm here, we put up a bunch of content on YouTube, so go over there. If you're not already there, hit that subscribe button. If you're watching this replay, whether it's on Facebook or YouTube, drop your questions into the comments. I'm happy to answer them even after this replay is going. And yeah, Tommy, hey, thank you for hanging out with us. Appreciate it. And all of you have an amazing day. Enjoy the mugginess after the rain that we had yesterday. And if there's anything that we can do to help you in real estate, hit us at resg.com. All right. Thank you, everyone.